Welcome to our PIDE podcast show. Today we are going to discuss about the public debts. We are just going to discuss about the exchange rate, the cryptocurrencies, the digital currencies, and our guest speaker is Professor Barry Eichengreen. We all know that he's a professor of economics and a professor of political science in the University of California, Berkeley. And Barry is a research associate of the National Bureau of Economics, the Economic Research, Cambridge, and the research fellow of the Center for Economic Policy and Research, and he was a senior economic advisor at IMF. Barry, welcome, and thank you very much for joining us. And good morning, the formally good morning, actually.
Abdul, good evening. Good to be with you.
Thank you, Barry. Thank you for joining us. Barry, let's start from your book, the very recent book, which is very timely published and very timely in the market. The title of the book is In Defense of the Public Debt. Your book offers a fascinating history of public borrowing, going back as far as about the 2000 years ago with the Greek cities, states. Barry, but you say that the sovereign borrowing really took off in Europe starting in the second half of the millennium. Barry, my question is that why Europe? Why not China? Why not India? Or why not any other country? I mean, is it linked with the Industrial Revolution or any other revolution or the war? Or I just wanted to ask that what is the linkages between the public debt and the economic activities, if there are some? Barry, your thoughts.
The reason it was Europe rather than China had to do with Europe's physical and political geography. So China east of the Himalayas is a great plain, which allowed the successive dynasties to unify the country and to build a great wall to help keep out invaders from the north. Europe, in contrast, is a continent divided by multiple mountain ranges and river valleys, and therefore fragmented politically into a host of smaller territorial states. This was true in Europe from the 9th century with the fall of what had been the Carolingian Empire. So all these contrasting, territorial states butted up against one another, engaged repeatedly in offensive and defensive wars. So states and their rulers, the sovereign, had to borrow in order to mobilize armies. And it was, and the market and public debt was really born out of these military needs, which were much more immediate and extensive in Europe than elsewhere. Why starting in the 14th century, which is really when you see this borrowing in Europe begin to develop? Because there had to be a certain level of financial and commercial development. Italian bankers had to be present on the scene. There had to be the champagne fairs in France where traders got together and required a certain level of credit and finance. So all of this begins to come together, the physical geography, the political geography, a little bit of financial development, and a little bit of commercial development to make Europe first and make it begin to happen in the 14th century.
Do you think that the debt was by itself an innovation, and it helped the innovate and the develop finance to lubricate the economies, as the Schumpeter has said?
The ideas that we develop in the book, that public finance can provide impetus for the development of private financial markets. So in some circumstances, at least, the state's debt provided the kind of safe and liquid asset that private financial markets need. It was used as collateral for private borrowing. Investors in public debt securities could post them as collateral when they solicited additional loans for themselves. In a number of places in the Netherlands, most prominently a bit later in England, you prominently see this synergy between public finance and private finance. So in a nutshell, my answer to your question would be yes.
Let's talk about the good debts and the bad debts. When the government takes the debts or they create the fiscal deficit, they ever claim that their fiscal deficit will create a good debt. But in the ex post, we see that that their claimed good debt has been converted into the bad debt. My question is where is the fine line between the good debt and the bad debt, where we think that there is a distinction between the good debt and the bad debt?
And difficult to draw. So
Okay.
economic historians have long talked about the distinction between development finance on the one hand and revenue finance on the other hand. Some governments borrow in order to invest in projects that foster the development of the economy. Other governments borrow simply to meet their immediate financial needs. So in the book, we tell a variety of stories about the Egyptian Khedive famously borrowing in the 19th century in order to hire ballet dancers to entertain the court. That kind of borrowing and spending doesn't automatically translate into an increase in economic activity, exports, hard currency receipts, all of which would be needed to pay the money back. On the other hand, we see other countries borrowing in order to expand ports and build railways connecting the interior with the coasts, build urban sewer systems and invest in urban lighting, where we know that economic activity is disproportionately concentrated in cities, in urban areas. So in principle, we know where to draw the line. In practice, it can be much harder. So we also tell the story of the debt of the country of Honduras in the 19th century, which invested in order to build a canal across the isthmus of Central America. You would think that building a canal would be a promising commercial investment that would translate into more traffic and more revenues for the government, which would be collecting tolls and so forth. Honduras is still trying to complete that canal 150 years later. So in practice, the line is hard to draw. When you're investing in our early childhood education and public health, is that a productive investment that will pay for itself over time? In principle, yes, but as we say, the devil is in the details. Exactly how it's done will determine the productivity of the investment and whether the borrowing is, in your words, good or bad.
Let's come across Pakistan. As far as we know, that there is no secret about the lowering that debt burden in Pakistan. How can we do it? But the problem is that the economy of Pakistan and some other indebted economies, they have some serious structural issues. We are not seeing some short-term solutions. Do you think that that lenders should think about the debt forgiveness or the write-off policy, or what could be the international level understanding to avoid the debt crisis in countries like Pakistan?
I'm not an expert on Pakistan per se. I look at developing countries and emerging markets as a class. I think for developing countries and emerging markets as a class, there are quite a number whose debts are going to have to be restructured in the aftermath of the COVID crisis. So levels of public debt relative to GDP have risen strongly in the crisis. And I'm aware that Pakistan is one of the countries for which that's true. I think growth prospects for developing countries and emerging markets will face headwinds going forward because global trade will grow more slowly. Interest rates will be higher in the future globally than they have been in the past. For all those reasons, I think some debt restructuring is in the cards. So Paris Club debts will have to be restructured. I think China will have to restructure some of the Belt and Road loans that it has extended to its partners, and most challengingly of all, commercial loans through bond markets, through international bond markets, may have to be restructured as well. The international policy community, the group of 20 countries, have had an initiative to try to encourage that kind of restructuring. Very little has happened so far. The international policy community has tried to channel the latest tranche of special drawing rights to developing countries and emerging markets in need. Very little has happened so far. So my answer to your question would be yes, debt restructuring is coming, and too little has been done along those lines so far.
Just a bit more. You offered some fascinating historical stories about the successful debt consolidation episode. What do you think that how for Pakistan and the other countries, what lessons can be drawn from those historical series?
Debt restructuring happens, that it tends to be delayed excessively. Governments and investors both hope against hope that good news will turn up, and sometimes it doesn't. Governments can restructure their debts in cooperation with their creditors. And if at the same time they put in place credible policy reforms, they're not going to be excluded from financial markets forever. They can get back into the market if they put in place institutions that deliver sound and stable monetary and fiscal policies.
The recent the episode of the fiscal spending in the backdrop of the COVID crisis has fueled an increasingly heated debate over the risk posed with the public debt. Do you think that this new debate have some lessons for the emerging markets or the developing countries or Pakistan?
We embarked on writing our book in defense of public debt before the recent crisis, although books take time. The book came out in late 2021 after we'd been embroiled in this crisis for a year and a half. And I think the lessons that come out of the book that pertain to the crisis are that in an emergency, governments are right to do whatever it takes to meet the needs of the public, and that they sometimes, in response to a pandemic, a financial crisis, geopolitical emergency, they have to mobilize all available resources, and that includes the resources that can only be mobilized by borrowing, by issuing debt. But that once the crisis has passed, they have to restore and enhance that capacity to borrow. So we know COVID-19 is not the last crisis the world will face. There will be another financial crisis, another public health emergency, geopolitical crisis. So governments have to prepare for that eventuality. There may be a climate-related disaster, and they prepare for that eventuality by consolidating the debt, by reducing inherited debt to GDP ratios. And I think governments, including my own in the United States, now need to begin moving in that direction. That's what we conclude in the book.
In the same line, many forecasters like the JP Morgan and S&P, they are saying that basically they are painting the rosy picture about the emerging markets. But in many writings, you are not in line with those forecaster. What is your stance in this side, in this way?
I'm more pessimistic because, as I said before, I'm worried about slower growth of trade against the backdrop of ongoing tensions between the United States and China. That bilateral trade conflict will spill over into the World Trade Organization's deliberations, and I think translate into slower growth globally. I think the fact that the major economies, China, the European Union, are going to be growing more slowly going forward because of demography, because of the energy transition, which is necessary, but will slow growth in Europe in particular, because of various geopolitical flashpoints, and because of automation, which is going to undercut the scope for low-wage manufacturing in developing countries. That combination of headwinds for emerging markets in developing countries makes me more cautious. You said more pessimistic. Both characterizations are right. I'm more pessimistic than many other forecasters. And that's why I think in turn that debt restructuring will be unavoidable.
The economists and the policymakers have always missed in the inverted commas, the things. Are there ways in which economic historian can help the current policymakers not to be satisfied with the lessons of the history and get them to think more generally about these issues?
I'm talking my own book when I say history is important for providing a perspective on current policy problems and on how officials should respond to them. I would say two things about that. Number one, we want to do more than look for historical parallels. Often the history is useful for pointing out differences between our current situation and past problems, rather than similarities and parallels. And secondly, it's important for officials to have a diversified portfolio of historical analogies or historical examples. So at the moment, it would be a mistake to say the inflation problem in the United States is exactly analogous to the inflation problem of the 1970s or something like that. Instead, one wants to look at inflation in a variety of times and places in the past and understand better what was similar and what was different to the circumstance we now face.
Professor, one more thing. There's a thinking that the issuance of the central bank digital currencies will transform the international monetary status quo by eroding, that the US dollar's dominance of the cross-border payments. And what is your take that it is going to be happen?
I don't think central bank digital currencies will profoundly change the international financial landscape or the role of the dollar. China is moving ahead rapidly with central bank digital currency, and some other central banks will follow. But making those digital currencies interoperable, having them all trade on the same blockchain is a formidable challenge, not so much technically as politically. Who would govern, oversee, regulate that single blockchain? So I think we will see central bank digital currencies being used domestically in a variety of different countries, but not so much for cross-border payments. I think there are a variety of other private sector initiatives, starting with things like PayPal and so forth, that will be used for cross-border transactions and bring down those costs. In terms of the international monetary and financial system, I don't think the competition will be between the dollar and the CNY so much as it will be between the dollar on the one hand and a number of non-traditional national currencies on the other. So if you look at the data, what has changed over the last 10 years is that the dollar has lost market share in terms of international reserves. Its share has declined from 70% of global reserves to 60%. And the currencies whose shares have increased are the Australian dollar, the Canadian dollar, the Norwegian krona, and so forth, non-traditional currencies that are viewed as diversifiers. They don't move in lockstep with the dollar, so they have diversification benefits. And trading them has become easier in our high-tech electronic financial world. So I don't think it's going to be cryptocurrencies or digital currencies. I think it will be non-traditional national currencies.
Most of the economists are thinking that this is an out-of-box thinking. What is your take on modern monetary theory? I mean, MMT, your views?
Modern monetary theorists have a point about what can be done and what cannot be done in a zero interest rate, zero inflation rate environment. So when inflation is not a problem and when interest rates are zero, governments can spend more and they can borrow more without, and central banks can buy their bonds to help finance that borrowing without any problems. And that is kind of the world that we in the advanced countries, not you in Pakistan, but we in the advanced countries lived through in the decade after the global financial crisis. But in a world of positive interest rates, we're heading there rapidly now. And in a world of positive inflation rates, and we're there already in the advanced economies, more government spending, more government borrowing, more government purchases, more central bank purchases of government bonds can create real problems in terms of inflation threatening to spiral out of control, debts becoming unsustainable if governments continue to borrow. So the irony, in my view, is that MMT became fashionable just about at the same time when the conditions under which MMT is valid were no longer with us.
Okay. My Vice Chancellor, Dr. Nadimul Haq, always says that there is a lot of need to understand the digital sphere and the cryptocurrency. He says that it is a poorly understood. But however, there is an increasingly intense scrutiny and security by the central bankers and the regulators and the investors. What do you think, the more security or the scrutiny means the much better understanding, or still we have to understand a lot?
Well, I think we're struggling to understand and struggling to keep up with rapid change in the digital financial sphere. I think that cryptocurrencies and stablecoins need a regulatory framework, just like any other asset class. And the regulatory authorities in our countries are only beginning to understand what is needed and provide that regulatory framework. And once that framework is there, trading of these assets will normalize. And I think they will be here to stay. But it's important to remember the fundamental cases for regulation. We have regulation on consumer protection grounds, and many naive investors are losing their savings by investing in dubious cryptocurrencies. We have regulation on market integrity grounds. We don't want big investors to be able to manipulate these currencies, and most Bitcoin trading is done by a small handful of investors. And we have regulation on financial stability grounds as well. So here, stablecoins have to invest their collateral in treasury bills and the like. If there was a run on a stablecoin like Tether, it would have to dump its treasury bills, which could create March of 2020 like problems in the treasury bill market. So regulators are going to provide rules addressing all of those problems. And in the US, certainly they're still trying to figure out what kind of rules.
One more question regarding Pakistan. there's a discussion in Pakistan because we have the shortage of the foreign exchange reserves. Foreign exchange reserves means the dollar, actually the American dollars. We always discuss that we should trade with China in the Chinese currencies because we have a lot of trade with China. Uh, what do you think that, is there any possibility of China is no longer pegging with the yuan, with the dollar? And what is the possibility in the future the dollar will remain will be dominant, or the Chinese will be accepted as a forex reserves? And do you think that what are the preconditions for the Chinese renminbi if it can be accepted as a world currency?
China is doing everything it can to encourage those practices, to encourage foreign central banks and governments to hold its currency and invoice and settle their bilateral trade with China in China's own currency, the renminbi. But progress has been very, very slow. If I look at diversification of reserves out of dollars in the last 10 years, a quarter of that diversification has been into Chinese renminbi, but 3/4 of that diversification has been into those other non-traditional currencies that I was talking about before. People, governments are still reluctant to use and hold the renminbi, partly because access to it is limited. China still has capital controls of various sorts, and because they're worried about China's ability to change the rules of the game. The renminbi I have access to today, I may not have access to tomorrow because the Chinese government can change the rules whenever it wants. Historically, leading international and reserve currencies have been the currencies of political democracies and republics, where there are checks and balances on arbitrary action by the executive. And because there are no checks of that sort on action by the Chinese Politburo, I think there is a reluctance to utilize the renminbi more extensively.
Let's suppose if dollar loses its dominance, which currency will be have the leading role? That renminbi, a euro, or digital currency, or any other currency?
So as I've alluded to a couple of times, my view increasingly is that the dollar will not be overtaken by one of the other big economies, currencies, either by the euro, which doesn't have, the euro area doesn't have a treasury and a common debt. It won't be overtaken by the renminbi because of the political constraints I alluded to a moment ago. Instead, it will lose market share to a variety of currencies of smaller economies, the Swiss franc, the Norwegian krona, the Australian dollar, the New Zealand dollar, the Canadian dollar. I think we're heading toward a more multipolar global monetary and financial system, but not one in which dollar dominance is replaced by euro dominance, not one in which dollar dominance is replaced by renminbi dominance. So people always used to talk about the battle of the titans, where it was kind of King Kong versus Godzilla, the dollar versus the euro, or the dollar versus the renminbi. Think if the dollar loses its dominance, the dollar will be toppled by a swarm of midgets.
Any concluding remarks, suggestions, or suggestions for the economy of Pakistan, the policymakers of Pakistan, or the student of economics, or any concluding remarks?
I hesitate to advise Pakistan's policymakers, although I did act as a dissertation advisor for one of them, your esteemed central bank governor. So I would ask you to direct your question to Riza rather than, but I do think that the least painful way of dealing with inherited debt problems is to grow the denominator of the debt to GDP ratio. So I was looking at the IMF's forecasts for Pakistan's growth in the medium term, 4 to 5% per year, raising that to the high single digits through policy reforms and sensible investments would be the ideal scenario. And I defer to you and Governor Bakir and others about exactly the best way of doing that.
Thank you very much. Thank you, Veer. This is our end for the Professor Barry Eichengreen. Really thanks from the heart that you spare some time for us. And we will be on air in the next week with a new speaker, a good topic. Thank you very much, Veer. And thank you, Barry. Thanks a lot. Bye-bye.